You've reached the 20-year mark in your military career and finally you're ready to transition out. You recognize you will only receive half of your high 3 base pay and you'll no longer receive BEH. But you are now learning they want to take some money away from you in the form of an annuity. Should you do it? I'm Mitchell Hockenbury, and I'm going to talk you through the pros and the cons of signing up for the Survivor Benefit Plan. You know that only half of your high 3 is available as a pension. But worse, no BAH. That means you're not taking a 50% pay cut, but more like 65%. And now they're asking you if you want to participate in the Survivor Benefit Plan? Another pay cut? But I think you need to look at this in a different manner. The Survivor Benefit Plan is to provide a portion of your retirement pension to your loved ones when you die. In essence, you are paying via a reduced pension amount for an annuity to be paid out to your spouse or your children or both when you die. Now, this is actually a really good thing. Let me paint you a picture. You're married and you have 2 children under the age of 18. You retire after 20 years and you begin to draw your monthly pension in the amount of $2,500 a month. If you die soon thereafter, do you know how much your pension is going to go to your spouse and children? 0. Zilch. Let that sink in. You serve for 20 years expecting to receive this nice pension for the rest of your life, a long life, but you die early. Your spouse didn't earn the pension by serving the 20 years, you did. Is that fair for your spouse? Not really. But by taking a smaller amount, usually around $200 less per month, you are providing your spouse a portion of the pension in case you die. This is a really big benefit. Now, I'm not usually a proponent of annuities. In fact, that's a bit of an understatement. I like to look at it other ways that you can manage risk, whether it's self-insuring, for instance, or getting a term insurance product. But here's the thing. I've run the numbers, and the Survivor Benefit Plan is not only competitive, in many cases, it's a better deal. Clearly, I am talking in generalities here because I don't know your specific situation, nor your health or any of that other stuff. Be sure to talk to a financial planner and run the numbers specific to your situation. But let me just lay out some pros and cons of the Survivor Benefit Plan. Pros. 1, it provides income to the spouse after the service member's death. 2, you cannot be denied enrollment due to poor health reasons. 3, the beneficiary cannot outlive the annuity. It goes on until their death. 4, peace of mind knowing your loved ones are provided a monthly amount of money. 5, it is very inexpensive. Think cents, not dollars more, just to add children to the plan. 6 is a great part. After 360 monthly payments, kind of thinking like a house mortgage here, and reaching age 70, you are paid up. You no longer need to contribute, but your spouse still receives the benefit. Okay, now there's some cons. 1, less money. Your pension is reduced each month. 2, if you outlive your spouse, there is no benefit and you don't get a refund of that amount. 3, if you divorce your spouse, too bad, the spouse is still entitled. 4, it's an irrevocable decision. 5, the cost increases each year with COLA. And 6, there is no cash value. Look, overall, I really like the Survivor Benefit Plan. I cannot recommend it for everyone's situation, but generally speaking, it's a really good thing to enroll. Thanks for watching. If you haven't subscribed yet to the Personal Finance Made Clear YouTube channel, please click here and do so. And if you haven't watched my explanation of the Survivor Benefit Plan video, watch that one next. And then be sure to go over to personalfinancemadeclear.com where I've laid out some resources that'll be very beneficial to you. All right, thanks.